Welcome to the Cycle Framework Insights podcast with Chief Strategist Brian Jordan. Hello, this is Miriam Rush from the CFI podcast. And to continue the spirit of Independence Day, we have a special red, white, and blue topic on tap for this episode. I am joined, as always, by our very own Brian Jordan, this time to discuss American economic exceptionalism, specifically the strong performance in the U.S. economy and financial markets relative to the rest of the world. Brian, let's start by putting this subject into context. By just how much has the U.S. outpaced the global economy in recent years?
So in one sense, the U.S. has actually lost ground in recent years, at least relative to the broad global economy, the entire global economy. If we go back to 2000, the year 2000, at that time, the U.S. accounted for 28% of global GDP. Today, the U.S. accounts for 23%, roughly 23% of global GDP. So in a very big picture sense, the U.S. has actually lost a little ground in recent years. But of course, the US is a big, advanced economy, and relative to other big, advanced economies, the US has been in a clear leadership position in recent years. If we just look at the past year, for example, US GDP is growing by 2.9% on a year-over-year basis. That's real GDP. That's more than 2 times any other G7 economy. The next strongest economy in the G7 is France, growing at 1.3% year over year. And in fact, there is only one other G7 economy growing by more than 1%, and that's Canada at 1.1%. So more than 2 times any other G7 economy over the course of the past year. And if we go back further in time, back to the year 2000, since then, the US has grown by 65%. US GDP has grown by 65%. That is also the strongest in the G7 over that time frame. Canada is close. Canada has grown by 61%. Nobody else is close, though. UK at 46%, France at 35%, Germany 31%, Japan at 19%, and Italy just at plus 12%. So the US has outperformed to a significant degree recently. It's also outperformed other advanced economies over the last quarter century.
Wonderful. So what has this meant for asset prices specifically?
So just as we've seen outperformance on the economic side in the real economy, we've also seen outperformance from the US in financial markets and risk assets in particular. Since the year 2000, the S&P 500 is in the top 30 of all global benchmarks. And in this decade, the S&P 500 is in the top 12. In fact, there are only 10 markets that have outperformed the US in the 2020s in this decade in terms of benchmark equity market indices. And most of these are emerging markets. Argentina has outperformed the US. Cyprus has outperformed the US. Lebanon, Zambia, Mongolia, Kazakhstan, Turkey have outperformed the U.S. In the current decade. The U.S. has outperformed, outside of the top 10, the U.S. has outperformed every other global benchmark since the end of the last decade. So we've had very strong real economic performance. We've also had very strong relative financial market performance, especially in the equity market.
That's incredible. So how did we do it? How has the U.S. been outperforming?
So to get outperformance to this degree, obviously there are a number of fundamental factors that have contributed and continue to contribute. The U.S. has a lot of built-in advantages. The U.S. is the world's largest economy by a wide margin. It has the world's reserve currency. It has the deepest financial markets by a wide margin. But the U.S. has a number of other advantages as well. The U.S. has a great educational system, at least a great university system. The Bible of world university rankings is the Times Higher Ed rankings that come out every year. And in 2024, 16 of the top universities in the world in these rankings are US universities, 16 of the top 25. Only two other countries have more than one in the top 25. The UK has four, China has two. And with a strong university system, we also attract a lot of venture capital. We have a lot of innovation. We have a lot of very smart people in the US. The US still attracts close to 50% of all the world's venture capital. So it's a hotbed of entrepreneurship, hotbed of startups, attracts a lot of capital as a result, and we get a lot of innovation as a result of that. The US also has a very large, diversified workforce, and it's a relatively young economy, at least versus other developed large economies. So the US is getting older demographically, but again, relative to other large economies, still pretty young. The average or the median age in the US right now is approximately 39. That is the youngest in the G7. The UK is at 41, France and Canada at 43, Germany at 47, Italy at 48, and Japan all the way at 50. And so along with that, we've had relatively healthy labor force growth. The labor force is at least growing here, not growing gangbusters, about 0.3% per year, or the prime working age labor force at least growing by about 0.3% per year. These are people in the 25 to 54 demographic. That's a little bit lower than Canada, but it's much better than Germany, which is negative, Japan, which is negative, Italy, which is negative, and France, which is negative. Most of the G7 is declining in terms of labor force growth. Prime labor force growth. The U.S. is still growing. Of course, economic growth is not just labor force growth, it's also productivity growth. That's where the strong university system comes in. That's where the venture capital comes in. That's where the innovation comes in. The U.S. has seen stronger productivity growth, even though we're coming off of a period over the last decade or so where productivity has been relatively soft in the U.S. versus where it was in the late 1990s and early 2000s. Over the long haul, productivity has been much stronger in the US than it has in the rest of the developed world. And again, this speaks to innovation. There's an implementation challenge for countries that are catching up with those countries that innovate. And oftentimes in these cases, it's the US that's innovating. And so we've seen better productivity growth here. So we've had a number of structural advantages. We've also had some more short-term cyclical advantages as well. So many reasons for U.S. outperformance.
That makes a lot of sense. Definitely. But here's the most important question. Can we keep it up? Can the United States continue to outperform in this way?
So I think we need to answer this question from two different perspectives. First of all, from a real economic perspective, I think the answer is emphatically yes. Those advantages that we just talked about aren't going away anytime soon. The U.S. is going to be the largest economy in the world for some time to come. The U.S. is going to have the world's reserve currency for some time to come. There's been a lot of question about that in recent years. But there really isn't a viable challenger to the US dollar on the world stage at this point. There are issues with the Chinese RMB as a competitor to the dollar. There are issues with the euro as a competitor to the dollar. The dollar is likely to remain the world's currency. And along those same lines, the US Federal Reserve is likely to remain the world's central bank for a long time to come. The Fed isn't the oldest central bank in the world, but it is the most respected and the most followed central bank in the world. And unless there is a sea change at the Fed, it's unlikely that its status is going to change anytime soon. So those built-in advantages aren't going away anytime soon. And at least in the next 10, 20, 30 years or so, the U.S. economy is in a relatively healthy structural place. Debt service burdens have come down quite a bit over the last few decades, obviously as a function of lower interest rates over the last few cycles. So U.S. households and U.S. businesses are very well positioned for the next 10 to 20 years. So the U.S. is in very good long-term position from an economic standpoint. And those differences that we talked about before between the U.S. and other large economies are only widening and only have widened over time. Other economies are getting older, other large economies are getting older more rapidly than the US is. Other economies are seeing weaker labor force growth and seeing that gap between prime working age labor forces expand relative to the US. US getting bigger, most of the developed world actually shrinking at this point. So U.S. economic outperformance, at least relative to large developed economies, is very likely to continue over the next several decades. In terms of financial market outperformance, however, the story there is a little bit more dicey. If we look back historically, we see that there is a super cyclical pattern to financial market out and under performance. The US, for example, the S&P 500 underperformed significantly in the 1980s, and then outperformed significantly in the 1990s, and then underperformed again in the 2000s, and then outperformed again in the 2010s. And so far in this decade, it's outperformed as well. But you can see that seesaw pattern over time. And a lot of this is tied to valuation. Long-term relative performance is very much related to valuation. And relative to the rest of the world, U.S. valuations are high right now. Price to earnings ratios in the US, price to book ratios in the US, elevated relative to the rest of the world. So we very well could see continued US economic outperformance going forward, but perhaps not quite so much US financial market outperformance going forward.
That brings me to my next question, and that is looking towards countries in the rest of the world. Are there any countries that might challenge the United States' dominant position on the world economic stage in the decades ahead? And which countries might be especially poised for healthy economic and market performance going forward?
So again, it's very unlikely that we're going to see a true challenger to the U.S., given the U.S.'s position, its structural position, its entrenched position on the world stage. That's very unlikely anytime soon. Just looking at the depth of financial markets, the U.S. equity market, the market capitalization of the U.S. equity market is more than 5 times as big as the next largest market in the world, which is China. In fact, U.S. equity market depth is larger than the next 10 largest equity markets combined. So it's not just that the U.S. is in a leadership position. The U.S. is in a leadership position by a long, long mile, by a very wide margin. It would take quite a bit for the world, for any country in the world to truly catch up to the U.S. Now we're going to see some countries though that are going to do well for a time and are poised for relatively healthy growth for a time. One country that's very much been written off in recent years, but still likely has at least one big run left in it, is China. China is not likely to truly challenge the U.S. as the dominant economy on Earth anytime soon, or come close to that anytime soon. But China still has some structural advantages. Demographics working against China, not quite as much as they're working against some of the big developed economies in the world. But China has a great educational system. If we look at the PISA rankings, the testing of high school students around the world, China has dominated those rankings over the past couple of decades. China still has a very high savings rate. A wise man once said, never bet against a country that has a strong educational system and a high savings rate. China has both of those things, still likely has a very strong run left in it before demographics really catch up to it in the decades ahead. Some other smaller economies that are likely poised to do well going forward. The obvious answer is India, of course. India has a very young population. India has a very strong educational system. India is English speaking, which is a great advantage. Great advantage globally. India has a great entrepreneurial spirit. It's got a growing labor force. Between now and the year 2050, the prime working age labor force population is expected to grow by 15%. So India has a lot of built-in advantages going forward. That's an obvious choice for the next couple of decades, an economy that should do well structurally in the decades ahead. Maybe a few less obvious choices, a couple of economies that are mired in some political difficulties at the moment, some geopolitical difficulties at the moment. Israel, a very young economy, a very entrepreneurial economy, and one that looks to have very strong labor force growth in the decades ahead. We just mentioned that India is expected to see 15% prime working age population growth between now and 2050. Israel is expecting to see closer to 60% prime working age population growth between now and the year 2050. Another smaller economy, even smaller than Israel, mired in some political tension at the moment, but has a bright structural future, is Kenya. And Kenya we can look at as a stand-in for sub-Saharan Africa in a lot of ways. But Kenya has a very young population, a population that's expected to grow very strongly, a working age population that's expected to grow not 15% or 60%, but 70%, 70% between now and 2050. Very entrepreneurial. We've heard about Silicon Valley, the Silicon Prairie in the U.S. Midwest. Kenya, of course, has the Silicon Savannah, great startup ecosystem built around a lot of technology firms. So there are some smaller economies that are poised for very strong growth or very healthy growth in the years ahead as well. And we should stress here, we're talking structurally, not necessarily cyclically. The U.S. has been a great structural story for quite some time. That didn't preclude deep recessions in the US, for example, in the early 1980s or in 2008, 2007 to 2009, or a very deep brief recession in 2020. These economies that are poised structurally for healthy growth are still going to have cyclical ups and downs, as virtually every economy does. But over time, they've got strong potential growth rates and should see strong average growth rates in the decades ahead.
Wow, that's reassuring, especially for those of us who live here in the States. Thank you, Brian. And thank you all for listening. For more information on this, and of course, a myriad of other topics, make sure to check us out at cycleframework.com. We'd love to have you join our family. With that, we'll leave it here and we will make sure to catch you on our next podcast.